Hey everyone, just yesterday, Warren Buffett's company Berkshire Hathaway revealed in a press release that they have invested $6 billion into 5 Japanese stocks over the past 12 months. So in today's video, I'm going to be breaking down everything you need to know about this recent investment. And in doing that, we're going to start by having a look at the 5 stocks, the 5 Japanese companies that Warren Buffett has invested in over the past 12 months. And I will be providing some initial analysis around that. Then I want to go in and explain the structure of the deal, as well as whether or not Berkshire Hathaway and Warren Buffett will be investing more money into these companies in the future. And then finally, I'm going to share my opinion as to whether or not you should be investing in these 5 Japanese companies. If you enjoyed today's video and you want me to make more content like today's video where I'm breaking down a big investment made by a successful investor, then make sure you let me know by leaving a like on the video and letting me know your thoughts on this video down in the comment section below. Now, for quite some time now, it's been a little bit of a joke about how inactive Warren Buffett has been at investing in the stock market, how his cash pile has just been consistently increasing, and his inability to find great investments that are big enough for Berkshire to invest in has kind of become a little bit of a meme in the finance community. But in 2020, Warren Buffett through Berkshire Hathaway has actually been quite active in the market. So just to name a few of the things that Berkshire Hathaway has done in terms of buying or selling investments in 2020, they made a $10 billion investment into natural gas assets from Dominion Energy. They sold completely out of their airline positions after buying into them a couple of years ago and taking an estimated loss of about $5 billion. They recently repurchased $5.1 billion of their own stock, which I covered in a video 2 weeks ago. If you're interested, you can check that out. They increased their investments in Bank of America and sold some of their other bank investments. And most recently, a $500 million investment into a gold mining company. And over the past 12 months, while all of these deals were coming out and becoming public knowledge, there was a deal that Warren Buffett and Berkshire Hathaway were doing that was not public knowledge until today for me, or yesterday for you. And that is this $6 billion investment into 5 Japanese companies. The 5 companies that Berkshire has invested into are Itochu, Marubeni, Mitsubishi Corporation, Mitsu, and Sumitomo. And those 5 companies, which I'm pretty sure I mispronounced every single one of them, so I apologize, but all of those companies are conglomerates basically. So they have many different subsidiary businesses, different companies within the larger company. And not only do they have a number of different subsidiaries, those different companies within the larger business all operate in a vast number of industries. And some of these industries are very contrast against each other. So some of these industries include food, machinery, textiles, metals and minerals, finance, energy, and transport. And not only are these companies widely diversified in terms of the products and services that they offer, these 5 companies are huge in terms of not only just Japan, but also the global economy and the global space of public businesses. So in terms of Japan specifically, these 5 businesses are all within the top 25 highest revenue generating Japanese companies, with Mitsubishi being number 2 and Itochu being at number 6. And in relation to the world, all 5 of these companies are also on the Fortune 500 biggest global companies list. And without doing a very, very deep analysis over a number of months, it's going to be very challenging to come up with a rational, logical conclusion about whether this business is a great investment immediately. But we can look at some surface level numbers to start to get a gauge as to why Warren Buffett might have been attracted to invest in these businesses specifically. The main thing that stood out to me is that each of these businesses, each of these stocks have a free cash flow yield that is very, very high, 15-20% in some circumstances. And what that means is when you're investing in this company, the business doesn't need to grow their cash flows substantially, or they could just maintain their cash flows and see 0% growth, and they could still potentially deliver double-digit returns over the long term to investors, because the stock price is just so cheap compared to how much cash flow the business is producing today. For example, Itochu has free cash flow of $6.2 billion and a market cap of $41 billion. So that's a market cap. That's basically the price for the whole business. So if we compare the free cash flow that the business is producing to the market capitalization, the price for the entire business, that gives us a free cash flow yield of about 15%, which is really, really high. And then we can move into a company such as Marubeni, which is even stronger with a free cash flow yield of about 20%. Now, to be clear, this 15%, this 20%, it's not a dividend. It's not money that just goes into your bank account every single year if you are invested in this company. It's free cash flow. The management team can decide whether some of that goes out as a dividend, whether they keep some in the business as cash to make their financial position better, whether they make internal investments, acquire a new business, or whether they repurchase stock. But the theory behind this is that if a business is generating a 15 or a 20% yield on whatever you paid for that stock, then over the long term, that return should be reflected in the dividends that you receive as cash, and the stock price going up as the business, as people are attracted more to investing in a business that is producing so much cash flow. So now I want to turn and take a look at the press release specifically so that we can understand a little bit more about how this deal is structured and whether Berkshire Hathaway is going to be investing more into these companies. The first thing that the press release tells us is that it was a subsidiary of Berkshire Hathaway that actually made the investment into these 5 Japanese companies. And that subsidiary is National Indemnity Company, which is wholly owned by Berkshire Hathaway. The company operates in the insurance industry in the United States and was purchased by Berkshire Hathaway in 1967. We also learned that the Berkshire Hathaway subsidiary purchased 5% of each of those company stocks, each of those Japanese company stock, and they were doing it progressively over the past 12 months. So they say that they spread out their investment into these 5 businesses over the past 12 months. In the press release, Warren Buffett also indicates his intention with this stock, and no surprise to anyone, he says that it is likely going to be a long-term hold for the company, and he also says that he has the authority to buy up to 9.9% of each of those companies' shares before he is then going to get approval from National Indemnity Company's board of directors to acquire more. So they have room to acquire almost twice as much as or to double their position from how much they've invested now without going to the board of directors to the subsidiary of Berkshire Hathaway. So to finish this video off, I just want to share my opinion and talk about whether I think that you should go out and invest in these companies. And this is going to be the same answer that I give whenever I'm asked this question. And really it comes down to your understanding and how much analysis you've done. So the first thing I would say is, if you're going to consider investing in any of these businesses, you need to understand how they make money from each of their divisions. And these businesses are quite complex. As I said, some of them are in chemicals and finance and food and textiles and all of these different industries. And if I was investing in these companies, I would want to deeply understand each of those segments. And then beyond that, it just comes down to following the same structure that we do for any business analysis. We need to be able to identify a distinct competitive advantage. We need to trust the management team and make sure that they're doing a good job, that they're skillful. And then we need to consider the price. What price are we paying compared to the cash flows that we can reasonably expect to get out of these businesses in the future? A couple of things to mention about these investments specifically is that, of course, they are on the Japanese market, on the Tokyo Stock Exchange. So as a result, it is a little bit trickier to get information about these businesses compared to when you're just looking at the US stock market. So that makes it a little bit harder. And if you're a beginner, I would probably avoid looking at foreign companies immediately. Just stick to companies in your home country or in the US when you're just getting started. And the other thing to mention is that all of the annual reports are in Japanese currency, in yen. So you have to do some conversions. Even to make this video, it was a little bit of a headache because I was getting the conversions out in order to figure out the market cap and the cash flow numbers in US dollars. So it's not anything that's preventing you from analyzing these companies. It's just something that makes it a little bit more challenging. And I would if I was a beginner getting started and I was just starting to analyze companies, I would stick to areas that are a little bit easier to access, businesses in my own country, and or businesses in the US market. And for me personally, there are tons of businesses available to invest in the US and the Australian markets, which is my hometown, and then of course the US market. So I have no interest at this point in looking outside of that and making my life extra challenging to spend all of my time doing currency conversions. So I'm happy to invest just in the US and Australian markets. And if some point in the future I want exposure to the Japanese market or some some other foreign market, I'm very likely going to access that through an ETF where I'm just buying into a basket of Japanese companies rather than going out and picking one that I think can be successful in their market. So I hope you guys enjoyed today's video. I want you to let me know your thoughts on this video and any thoughts around this investment down in the comment section below. And as I said at the start of the video, if you want to see more videos like this, then the best way you can show me is, first of all, be a subscriber so you get updated, and then of course hit that like button. But other than that, I hope you guys have a great day, and I'll see you in the next video.